Namaste and welcome again to our channel. As you know, our markets are off today due to public holiday. So first let's break down how the market performed on Friday 28th March and what can we expect the markets to do on Tuesday 1st April where we have Sensex expiry too. Owing to the last weekly expiry, Nifty was volatile and towards the day end it closed 72 points down, a drop of 0.31%. And Sensex closed 191 points, down by 0.25%. The fall was not big, but it seemed to be a major turning point. Though the major indices traded subdued, there was action on a lot of sectors. Majority selling pressure was seen on media stocks, which was down by 2.29%. IT sector, which has been in pressure from long time, even Friday it dropped 1.76%. Again, reality was down 1.42%. And lastly, auto stocks came under pressure due to Trump tariff of 25% that is set to get implemented from April 1st. FIIs seemed to have changed their stance. They have been net sellers to the tune of 4,353 crore. However, DIIs have again emerged as net buyers for 7,646 crore. So hereafter we have to see between these two market institutions who will win in this tug of war and where can we set to see the market taking the direction. So accordingly we will have to play our cards and then trade. All the global indices performed tepid on Friday and Monday too as we speak. They have all been trading in negative territory, down from 1% to 4%. Considering from last 2 to 3 trading sessions, the global indices have been falling. Maybe that could have some impact on our markets too. So tomorrow's opening is going to be crucial for Nifty as well as Sensex. Tomorrow being the expiry for Sensex, surely we can expect the market to be volatile. And since there have been a holiday or extended weekend that we had, so that impact also will be seen in terms of taking changes in the trade positions. So let's talk from the perspective of Nifty 50. So from the indices per se, Nifty has been trading from almost in last 2 to 3 sessions in this trading range. So once this trading range, wherever it takes out, the market is expected to continue the trend for a few more days in that particular direction or zone. So as we know that below these levels we have strong support and there being a gap. So if you see, these levels are the strong support from where we have suddenly seen a spike. So Nifty can come down and trade in this zone between 23,000 levels to 23,500 levels again. Once it further takes down, we might see further fall, sharp fall, or if it moves above these resistance zones, then we might come back and further start trading in this zone, maybe for a couple of days. So we have to wait and understand how the market is heading towards, and then accordingly take our trades. But as long as Nifty trades above 23,000, we can continue that we are in the positive momentum, and any point in time within a week or 2 weeks time we might again see back Nifty trading at these levels or above these levels. So let's understand from the perspective of open interest where the Nifty is heading towards. So as we speak, there are a lot of resistances at 23,600 levels, 23,700 levels, 800 levels, 900, and then 24,000 levels too. If we go further far at 24,500 levels, again we see a lot of call additions that have happened, and it seems extremely difficult for this weekly expiry for Nifty to trade, above maybe 24,000 levels. Now talking from the perspective of supports, we see there was good addition at, puts. However, immediately tomorrow this can be taken down, and if tomorrow Nifty falls below 23,400 levels, then we do not see an immediate support until 23,000 levels. Those strong, small supports are seen at 23,100, 200 levels, but these may not be sustaining once the selling pressure comes in. Something interesting that could be seen is we see small additions that have happened on the calls at the lower levels. So as you could see at 22,300 levels, 400 levels, uh, 500 levels, at all these levels we see good call additions that have been taken. So is this because of the trade adjustments that have had happened last week? Could be. So it might take a day's time for us to understand if these positions will be taken out. um, Supposedly if we see a lot of call additions happening, then there is something fishy. We have to be very cautious in terms of taking our trades, because there are high possibilities that there could be a sharp downfall that might also happen, and then we can suddenly see the open interest could be at these levels too. So yes, until 23,000 somewhere we will have a breather space. But yes, if 23,000 levels are taken down, then it again seems to be difficult for the recovery for Nifty, and our markets can continue to trade at the lower levels. Now let's understand from the perspective of Sensex. Sensex also has been trading negative for last 2 to 3 trading sessions, and there seems to be a lot of selling pressure that we had seen, which eventually is not letting the market take up the resistance zones which it had previously created. So even on the downside, if we see, we might have a lot of support at these levels, and then if Sensex falls at below 77,000 levels, then we have to be cautious, because in no time we can easily come towards the 76,000 levels too. But yes, if there is no much fall on Tuesday, we might see Nifty trading in the range of maybe 4 to 500 points, and then for next 2 days it can move in a consolidation phase, and whichever uh, side it takes down, either on the resistance side or on the support side, we have to start taking positions accordingly, because there could be a straight direction that it could capture from there on, be it on upside or be it on downside. So now let's understand from open interest perspective what we can sense out of the positions that have been taken in the derivative contracts. Now, if you see up, we see at 76,000, 77,500 levels, there is both call additions as well as put additions that had been seen. However, um, there seems to be a strong resistance at 77,500 levels, and then at every 500 levels again we see huge call additions that have happened, which says that maybe there is strong resistance at 77,500, 78,000, and then 78,200, 78,500, all these levels. So Nifty in a short term, uh, sorry, Sensex in the short term seems to not breach above 78,000 levels, and it seems to be quite difficult as there is no strong support or put additions that have happened. However, at each lower levels, we see again there is a coalitions that have happened, and this might, further, at lot of positions once Nifty or Sensex seems cracking. So we have to be cautious with every round figures where if Sensex is taking support or there seems to be a selling pressure that gets added. So from the perspective of weekly expiry, so the PCR overall is at zero point 0.9 and the PCR at the money is 1.07. So this seems to be positive, but at the opening itself, if the Sensex falls 4 to 500 points, then recovery seems to be difficult for it to come back to 77,500 levels back again. So we will wait and watch maybe for first 1 or 2 hours. If Sensex is taking a lot of support and there seems to be a strength coming in on the lower side in terms of buying, then we can see a recovery is expected to be there for maybe 2 to 300 points up. From the perspective of Bank Nifty compared to Nifty as well as Sensex is very strong, and even last Friday it was in indecisive zone where neither the sellers could take it down nor the buyers could take it up. So a day or 2 days trading session will help us understand where the Bank Nifty is heading towards. Comparatively, when all the other indices like Nifty, IT, auto stocks are falling, however, we could see a lot of buying momentum was seen in the banking stocks, and majority of the big banks have already come to a stage where they have either crossed their previous 52 weeks high or are closing almost towards the 52-week highs. So this shows a lot of positivity in the overall index, which could take strength at every support levels. So these are the support levels: 50,500, 51,000, where we can see strong support that could emerge for Bank Nifty. And if this support is sustained, then we might see Bank Nifty heading towards again the previous resistance zone at these levels around 52,000 to 50,000 2,000 500 levels, and then we might see strong strength coming in all the banking stocks, which can head the Bank Nifty on the higher side. So let's see from the open interest perspective what we can make a sense. So at each 500 point levels, we see both the call additions as well as put contracts um, getting added. However, something surprising is 1500 points above at 53,000 levels, we see strong uh, you know put additions that have had happened, and also there is a lot of call additions. So these bars definitely signify that maybe in the coming days we might see Bank Nifty soon uh, you know uh, covering maybe 500 to 1000 points up, and might start trading at in between the range of 50,000 to 52,000 and above. So if this gets sustained for the entire, maybe 4 or 5 trading sessions in the start of April month, then that can add a lot of positivity, and we can see a lot of open interest additions that can be expected at 52,000 levels, or maybe at 51,500 or 51,000 levels. So these levels will surely help us to um, show a lot of strength in Bank Nifty stocks, and that could be the turning point for even the Nifty as well as Sensex to trend towards the positive zones. So let's see, since it is just start of the month, that is when concluding anything would not be very positive. But yes, there are already some carried over positions from maybe the previous month, so that shows a lot of strength in Bank Nifty. So moving lastly towards the Fin Nifty, uh, compared to Bank Nifty, Fin Nifty closed in positive. Here as well, there was indecisive, nature. Neither the buyers could, take it up, nor the sellers could take it down. So though even Bank Nifty as well as Nifty have been Nifty 50 has been, um, trading in negative zones. However, um, Fin Nifty had shown a lot of strength, and majority of the 6-7 sessions, it was quite positive, and it almost closed above the 52-week high too. But last Friday it could not further go back to those levels and re-achieve the new 52-week highs. However, in the coming days, if the positive momentum still continues to be there, Fin Nifty would be the first indices to further make its all-time highs. So we have to closely watch on the banking stocks and the NBFC or the capital market stocks, how they are headed towards, and if there is positivity seen across all these kind of stocks which are representing in Fin Nifty, then we can surely expect that there could emerge strong support at 20 uh, 4,800 levels, below which Fin Nifty might difficult to break. And if 24,800 levels are sustained for almost like 2 to 3 days, then we might see a breakout also that can happen on the upside. So let's see from open interest perspective. It's very early to talk about the positions that have been built. There seems to be both a lot of call additions that have happened, and also the put additions that have happened. So 25,000 is a crucial support as well as resistance. Once the resistance is taken down, we do not see any further resistance that is emerging from the perspective of open interest, and straight up there we can see Fin Nifty could move towards 26,000 levels. Similarly, on the lower side, if we see there is support at 24,500 levels, simply because of the round levels again at uh, 24,200 levels, and then 24,000 levels. So it's too early to decide how the Fin Nifty is heading towards from the perspective of derivative contracts. However, from the charts, it's very evident that Fin Nifty is in positive zone, and any support or consolidation that happens at these levels, there are high possibilities that it could break out soon on the upper side. So lastly, we will try and understand how the FII and DIIs have been taking positions. So from the perspective of index futures, FIIs are short, and they continue to take more short positions as we move ahead, which is not a good sign. On the stock futures, they are quite bullish. However, each day uh, they have been liquidating their long positions in stocks too. On the index options, they are long on call options, and they are twice long on put options, which signify that they expect the market to fall. So net on index options, they are overall short. So from the perspective of proprietary traders, they are short on index futures, and they are mildly long on stock futures. And on index options, they are short, slight short on call options, and they are short on put options too. So looking at the overall positions, proprietary traders are long, and FIIs are short on the index options. So whenever we see difference in opinions between FIIs and proprietary traders, so that would be a crucial point or moment where we will have to closely monitor and track their positions. And the moment that both FIIs as well as proprietary traders have same plan or same positions, that would help us in identifying the trend. Now from the perspective of retail traders, uh, on the index futures, retailers are long. On the stock futures, again they are massively long. On the index options, they are short on call options, and they are also short on put options. So net retail traders are long on the overall positions. Uh, Again, compared to FIIs and retailers, FIIs are short, retailers are long. So whenever retailers will be wrong, there are high possibilities that the market can fall for maybe 2 to 3 days of time, and then from there on we might see some trajectory or zone where the indices are expected to head towards. It could be the consolidation phase, or it could be a strong rebound to the higher levels. So last up would be on the uh, cash positions. So FIIs have taken short positions on cash market, and DIIs have been long to the tune of 7,646 crores. Now we have to understand if DIAs are long on the Nifty 50 stocks, or they are long on the broader indices on the cash market. So let's see tomorrow how the market is expected to open, and where it is taking a strong support. If for almost an hour or 2 hours, if the support is sustained, then we might see the recovery happening back towards the closing where both Nifty and Sensex had closed. Or if the selling pressure continues and there is no rebound that is happening, then be prepared for the downfall to happen from here on. There might be consolidation for few phase, but that would reverse the overall trend that we were seeing, and then head towards the downward trajectory. That's it for tomorrow's action plan or the opinions. Let's closely watch the market, and accordingly, based on the movements for tomorrow, we will have to take the positions and trades accordingly. So until then, thank you and happy trading.